Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I wanted to look at the real estate market some more. I was thinking about lockdowns and travel restrictions, especially for foreign people. And I wanted to see, I was trying to tie together a couple of different things. I know a lot of people think that the housing market's in this bubble. And it gets me a little bit irritated because I don't know if they understand the market dynamics. One thing I wanted to look at when I was looking at some information was foreign buyers, because we've been on this lockdown with the medical event, and foreign people really couldn't be traveling to the United States. And one of the parts of the thesis of the channel is that when interest rates go up, money's going to rotate out of stocks and bonds. And in my opinion, it's going to find home in real estate, precious metals, and whatnot. But no one's really looking at foreign buyers. And we've been in this area where we've had travel restrictions. If those travel restrictions, let's say, let up, what you're going to see is you're going to see increased travel. You're going to see increased demand for energy like oil and all that, but you're also going to see increased demand from foreign buyers in the United States for real estate. So I was looking at this article here. It was written on November 5th of 2021. It says, real estate brokers brace for flood of wealthy buyers from overseas as travel restrictions lift. The U.S. will lift the travel ban on about 33 countries for vaccinated visitors, easing restrictions that prevented most foreign real estate buyers from entering the country to view and buy properties. Sales data suggests the wave of overseas buyers could generate tens of billions of dollars in added sales. Foreign buyers spent $267 billion on U.S. real estate in 2018, $183 billion in 2019 before the pandemic. We come on here. Wealthy real estate buyers from overseas are expected to descend on the nation's luxury housing markets Monday, giving a second boost to demand for high-priced apartments and mansions. The U.S. will lift the travel ban on about 33 countries for vaccinated visitors, easing restrictions that prevented most foreign real estate buyers from entering the country to view and buy properties. Buyers from Europe, China, Brazil, and India will now be able to enter the U.S. for the first time in 20 months. Brokers in cities popular with overseas wealthy, New York, Miami, Los Angeles, say they have a long list of showings scheduled in the coming weeks from buyers who've been anxious to invest in U.S. property. Now, one thing I want to talk about is a lot of foreign countries have their own problems with inflation. And if their currencies are diving at a faster rate than the United States currency, one of the ways that they can shield their wealth is to buy U.S. property, because the currency is also another way that they can gain and protect their wealth if their currency is going down at a faster rate than the dollar. So one way that they can protect and preserve wealth with a low risk investment is to take their foreign currency and buy U.S. real estate with it. Also keep in mind that there is a lot of dollars outside the United States that could be pulled from various investments like bonds, and that they will decide to deploy their money in real estate. And I don't think a lot of people are thinking about this type of viewpoint. They're not looking at it like, hey, this is a worldwide, this people in the entire world can come in and buy real estate. And if you've got no value that the United States is really producing in terms of products to buy, well, that money is going to come and seek something. It's going to seek something of real value, and that real value is going to be real estate. So scrolling on down here, this represents just another upside in demand that just didn't exist over the last 2 years. It will be especially beneficial to the high-end and luxury market. Sales data suggests the wave of overseas buyers could generate tens of billions of dollars. I went over that. Trophy assets, along with restrictions being lifted, overseas buyers have benefited from massive wealth creation during the pandemic with rising asset prices and stock markets. Flush with cash, the global wealthy are now looking for trophy assets. Cities like New York, Los Angeles, Miami, which have been always been hubs for the global rich, are still seen as safe investments despite the ups and downs of the pandemic. New York home purchases are super attractive to these buyers because they can use it or rent it out, but they can also hang on to it. It becomes something they're proud of. We're expecting a flood of buyers across all our markets in the United States, he said. And we're talking about foreign buyers. It says while inventory in Manhattan is still relatively high, this is Manhattan, with about 7,600 listings, sales and demand at the high end has been strong. New construction's preferred. It says brokers say overseas buyers prefer new construction, whether it's newly built mansion in Beverly Hills or a never lived in condo in a new Manhattan high rise. The new development and the higher end properties will be the biggest beneficiaries of the foreign buyers returning. Traditionally, China has been the biggest source of overseas buyers for the United States, but Chinese government crackdown on capital flight and wealth was slowing the flow of money into U.S. real estate even before the pandemic. Chinese purchases of U.S. real estate totaled $32 billion in 2017, but fell to $11.5 billion in 2020. While China remained the largest source of overseas buyers in the U.S., measured by dollar volume before the pandemic, Canada is a close second, with $9.5 billion in 2020. Mexico ranked third. It says before the pandemic, Florida was the largest market for overseas buyers, accounting for 20% of the nation's total. California ranked second at 16%, followed by Texas, Arizona, New Jersey, and New York. Brokers say that wherever they buy around the world, the wealthy like to be near the water. The coastal cities will be the main beneficiaries, Miller said. So that's one thing I wanted to touch on here real quick, that there are other buyers than just people focusing on the affordability of what an average person in the United States can afford. There's going to be money, massive amounts of money, looking for a home that doesn't want to go into stocks or bonds in an increasing interest rate environment. So you're going to get this big flood of money, and this may catch a lot of people by surprise looking to go into real estate. Another thing that I don't think people think of is they always look at the fact that when interest rates rise, things become less affordable. Well, if most people understand that, they're going to have to make a decision. Are they going to say, am I going to wait to buy a house, or am I going to jump on it and buy one now? So increasing rates may force buyers to buy even quicker, amplifying the problem. Now, the problem, it turns out, if I were to type in a housing shortage, America's housing shortage, what we're looking at is America's housing crisis is a disaster. Let's treat it like one, meaning that they had spent more than, okay, so there's a lot of homes that we're short. America's short more than 5 million homes, study says. So we're at a housing shortage of over 5 million homes. And we've got all this money that could potentially rotate into the housing market based off of interest rates. So I think that we're set up for a very large boom in the real estate market. People are going to look at home buyer sentiment. The home buyer sentiment is very low, but that's because they can't buy any homes. They are out of the market. They're going to be priced out of this market, and some of these people are going to be indefinitely priced out of the market. They're going to have to become renters. They're not going to be able to afford to buy a house. That's what happens when you have huge shortages. And the wealthy are going to come in here, probably from foreign countries, that if they have dollars or something that they need to spend in the United States, well, we don't produce a lot anymore. It's not like they're going to be spending on other things. And if they want to protect their wealth and their currencies dive bombing because of high inflation and producer price index and having problems with electricity in Europe and Germany, maybe they're going to migrate here and buy homes. So maybe we have more migration to the United States as well, on top of having a housing shortage for everyone that's already living here. So it's going to amplify that problem. Anyway, that's my opinion. If we're going to monitor this to see what's going to happen, we need to continue to monitor inventory levels. That is the measuring stick that I use. It's inventory, days on the market, and prices. If prices are going up and inventory is remaining low, we have not reached a market balance. Prices will continue to go higher, in my opinion. I do that about the 4th or 5th day of every month, because that's when the data is released for the previous month. So look for it, a January release of 2022, in around February 4th, 5th, 6th, somewhere in that time frame when I release it on the channel. And that's how we can tell what the housing market's doing in the short term. Right now, we are at incredibly low inventory levels. New home construction is ramping up, and a flood of buyers continues to remain. If you guys like this analysis, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.